All right, hello everybody. I'm gonna start a little bit early. Doesn't matter. I think when people tune in, they will tune in. Um, so essentially today, what I'm doing is I'm literally editing one of my, I would say monthly posts because whenever I do the Japanese company handbook challenge, I will just accumulate um, stocks that I want to create a top five post for. So every month I will roughly release one top five stocks post. And I was essentially what happened in one of the live streams was I was looking at this company called Kurabashi Steamship, okay, 9171, and essentially the company has really low margins, right? So I was very interested in looking at whether the company was able to um, actually make money after all is said and done because they spend a lot in capex, right? So they're buying these steamships, I think, right? All the steamships have a useful life, but they're generating really low operating income, right? So, despite the company having a lot of cash, a boatload of cash, a lot of long-term investments, right? Um, I wanted to figure out what is the IRR of this actual business. Like, is this shipping business truly generating a positive IRR? Because I was looking, so I went into you know ChatGPT and I was like, okay, instead of me actually manually doing all this work, I'm curious, what is the limit of ChatGPT's abilities, right? So yeah, that's what I wanted to do. Actually, I should on Twitter announce that I am live streaming already, so that people can join in right now. So okay. Just stay in the comment section. I'm live. Okay, yeah, I just wanted to say that. Okay, so so essentially what I did was for 9171, I went into Koyfin, right? So I went into Koyfin. What did I do? So I went into Koyfin, 9171, right? This is kind of like too lazy to compile actual, data. So what I did was I looked at income statement, balance sheet, cash flow statement, copied the clipboard. What I did was I generated a Excel document. See, let me find it for you guys. Give me a sec. Oh, I closed it. Let me open it up again. One moment. Yeah, so I just copied the numbers from Koyfin, income statement, cash flow statement, balance sheet, right? So that it would have the depreciation data, capex data, right? Of course, we don't know what maintenance capex is, which is the downside. But yeah, so I did that, and then I attached the raw Japanese files from the most recent fiscal year-end in financial statement, securities report, some medium-term. They had a medium-term plan, and also attached the Q1 financial statement and investor presentation along with that Excel document. And then just ask the following. I asked it, you know, ask the following prompt in Japanese and generate a response in Japanese. So because these documents are Japanese, sometimes I find that if you ask things in English, for example, if you prompt ChatGPT to, so for example, Kurabashi steamship, right? You ask it information about Kurabashi steamship, right? The results aren't as great as if the prompt was asked in Japanese. I don't know if it has something to do with how it sources the information. So maybe potentially if you ask it in English, it's going to look for English websites or yada yada yada. So potentially if you ask the prompt in Japanese, potentially it's better. I'm not sure. So exactly. So I said, ask the following prompt in Japanese and generate a response in Japanese. Assume you are an investment analyst who specializes in transport companies in Japan. You're looking at Kurobashi Steamship 9171 and it has really low margins. I want to know whether the core shipping business is even making any money, right? Because it's very important, right? Because if the cost of a steamship or ship or whatever type of vessel that they use, right, the price keeps going up, right, because of steel prices and whatnot, um, right, and it outlay a large sum of money to buy these steamships, and they are generating such low margins, right? Is the core business of the company even doing anything? Is it really generating capital, right? So generate a Japanese response, and then I said translate to English. And then the first one, it said, yeah, so it just gave me information is well, I know it's generating profit. So this was not the ideal output here. Um, yeah, so Jason said, yeah, I'm finding uploading foreign language reports and asking it to share takeaways in English is better from a garbage in, garbage out perspective. Yeah, so a lot of times, if I want to know about an industry, for example, like let's say I'm looking at the steamship industry, right? Instead of asking it, oh, give me an overview of the steamship or shipping industry in Japan, right? Instead of asking that prompt in English, I would ask it in Japanese instead and generate a response and then translate in English. Even in the prompt, sometimes what I'll do is generate a response in English in Japanese and then translate it back to English. I can do that all in one prompt too. But this one I did it in two steps. Yeah, so this wasn't the result I wanted because of course I know that they're generating profits, right? But they're just really low margins, right? So then I asked it again. I said, assume you're an investment analyst who specializes in transport companies in Japan. You're looking at Kurobashi Steamship. It's really low margins. Analyze the capex, depreciation schedule of the company, and tell me what the IRR of the shipping business is. Because it told me that essentially, uh, yeah, so this is what it spit out. It said that the financial statements and securities filings show that its shipping business continues to make heavy capex, primarily on large RO vessels. I have no idea what this is. We'll have to ask questions about that in a bit. With annual investments in the range of 3 to 4 billion, these vessels are typically depreciated over about 20 years. Okay, and annual depreciation runs close to 3 billion, representing a significant portion of operating profit. Based on this structure, the internal rate of return of the shipping segment is estimated at roughly 5 to 7%. I have no clue how it even came to this number, so I'm just gonna, just take this with a huge grain of salt. I will need to double check this 20-year claim in their financial statements. Actually, I do have the securities report here, so it is not translated yet. I do need to translate, but I'll translate on the side. Uh, Give me a second before I go over that. I'm gonna translate the securities report. And you can also add a prompt to ask ChatGPT exactly what page did you find that you know the depreciation, the useful life is 20 years, right? Where did you find that? You can ask those questions. So if you attach an investor presentation, you attach a securities report, you can ask it where did it find this information. Okay, so this suggests so continuing on with the response, this suggests that the business earns returns slightly above the company's cost of capital, but not at a level that would be considered strong. Well, I don't know how they even got to 5 to 7%. So them saying that this is above the company's cost of capital isn't. I'll also take that with a grain of salt, because vessel investments require long payback periods. This is true. This capital intensity explains the company's persistent low ROE, which is true as well, and thin overall margins. Yes, correct. It says you want me to create a sensitivity table, IR, under different capex or depreciation assumptions, so you can use it in your research model. I said, so instead I said, based on the Excel doc I attached on the other supporting documents, show me historically how capex, depreciation, free cash flow is low for the company. I want detailed numbers showing me their IRR. So then it took a really long time to, well, this looks like a long, long time. It would take even longer for a human to do this type of work, right? But it basically thought for a very long time in order to come up with a response. And so first thing was it extracted historical, cash flow from operations, capex, depreciation to get us some free cash flow. So it's calculation of free cash flow in this instance. So I generated this Excel doc, which is kind of useful. So yeah, cash flow from operations was capex, was depreciation, and then free cash flow for them is CFO minus capex here. And I just confirmed everything. And as we can see, if we accumulate all the capex, all the cash flow from operations, and we add them together, it's pretty much break even. It's pretty much break even. Um, and then it shows us a graph of what that looks like, and it might be break even mainly because of COVID. So COVID, people aren't going out, people are probably not buying anything. So we could ask it an assumption like, hey, what if this was a normalized period? So potentially, if there was a normalized period where CFL was anywhere between 3 to let's say 5 billion yen versus like 1.7. So you would probably have anywhere between like, I want to say 1.3 to 3.3 billion more. So yeah, if we think about it, like what, 1,300, 3,300, I add that. How many years is this? 10, right? So if I divide this by 10, that's, I don't know, is that even good? No, that's pretty trash, right? Like, we put in 40 billion, right, and we generated this much. Like even in the best case scenario, like I don't even need to calculate the IRR in this scenario. Like that's just astronomically low. Yeah, so just what a free cash flow is. Okay, here's a clean pull from Excel plus what we can and can't say about IRR. What the history shows. I extracted and reconciled the consolidated cash flow lines for 2015 to fiscal year 2024. CFO ranges between 3 to 5 billion. CapEx typically 1.1 to 5 billion with a big spike in 2020. Depreciation. Of course, we also don't know in this data whether they had any growth capex, right? This is very, like, they also have a hotel business, they also have a real estate business, and they also sell produce now, right? So they have these other businesses, like, but they don't break it out. They don't. Seems like they don't break out maintenance capex and growth capex. So it will be harder to determine, what exactly. This isn't actually a fair shake yet. So keep that in mind. That heavy investment years in 2015, 2016, 2020, 2021. We can take a look at that, what that is like. So a cash flow statement, if we look at capex, we had a heavy year in 2020, 2015, 2016, 2021, right. But I mean, these are kind of heavy too, right? Kuribashi, steamship, and steam cabbage. Yes, yes. Yeah, they do produce. I think it might be fruits and some, yeah, vegetables, probably. Something like that. Okay, so about IRR of the shipping business. A true IRR requires project vintage level cash flows, vessel by vessel. That's true. Like if we had this level of granularity, that'd be best. So we have vessel by vessel. We have to look at their entire fleet, right? Because if in 2015 they had a fleet of 10 ships, right? Now they have 15 ships, then that's completely different outlook, right? Shipping segment cash flows and associated capex timings. The public set and your workbook give us consolidated CFO, capex, depreciation, but not shipping segment cash flows or shipping only capex by year. So rigorous auditable segment IRR cannot be computed. Yes, that's very true. That said, few anchors help interpret returns. So shipping post sales, 49.1 billion, operating profit 2.3 billion, accounting for 92.5% of consolidated sales and a lion's share of group operating profit. Yes, so currently their hotel and real estate business are just like really minor contributors to operating profit and very minor to in terms of sales. This supports that the core fleet is profitable, but it doesn't break out shipping only capex and cash flow. which is what IRR needs. Yes. Okay, let's see what it says here. So I only read up to this point. I haven't read anything below. So we're discovering this on our own right now. So in capital intensive transports where segment cash flows undisclosed, practitioners sometimes use proxies. Free cash flow profile versus capex cycles. The 2020 spike of 9.7 billion aligns with the group's vessel program. Free cash flow turned sharply negative that year and normalized as assets came online. Depreciation stepped up from 2.3 billion to 3.1 billion through 2024. Consistent with new tonnage entering service, useful life 20 years is typical of the filing, but this is still consolidated. But what we don't know, what we need to establish, what we want to figure out is, what is the size of their fleet? Actually, I should type this out so I can kind of go over this. Give me a sec. This can be put in the additional questions section. So it's what is the size of their current fleet? What has the size been historically? Right. So that's a question. Another thing is, has the price of vessels gone up? Right, this could be very reasonable if steel costs go up, labor, how much people charge to even create these vessels. I have no clue. Also, I have no clue what is the price of their various vessels that they own. We don't know that as well. Yeah, what is the useful life? Is it 20 years? Because that was what GPT spit out, but I have not sanity checked that yet. Okay, putting those together and benchmark to the segment profit profile, the indicative steady state return on shipping assets screens as mid-single digits. Still, I have no fucking clue if this is legit or not. Under reasonable assumptions, what are your assumptions? Maintenance capex of 80 to 110% of depreciation, flat real throughput 20-year lives. Please treat this as directional, not computed IRR. So he's making some assumptions. That maintenance capex. So yeah, that's very true. So what is maintenance capex of vessels, right? Because it has 20 years of life, but of course every year, even cars, you have to do an oil change, right? So what is the, when you buy a vessel brand new, of course first few years when it's brand new, it's less, maintenance, but what does that maintenance schedule look like, right? We know for cars, for example, automobiles, the first 3 years is just a few oil change, maybe, change the headlights, a few parts here and there, like windshield wipers, right? But after, depending on your car, if it's a Toyota or BMW, after 6 years, you're gonna have some, major repairs every year, and if it's 10 years old, every year after that, you're gonna be replacing stuff, right? So, what does that look like? Okay, so then it said, if you want a numeric IRR today with assumptions, I can produce a sensitivity grid now that converts the consolidated lines into a shipping IRR estimate by allocating CFO depreciation capex to a shipping using segment mix, setting maintenance capex as a percentage depreciation, choosing a vessel life and a growth assumption, solving for IRR on implied cash flow stream. Say the word and I'll run 2 to 3 scenarios, conservative, base, optimistic, and hand you a table you can drop in your model. So I said yes, please, and I thought for 56 seconds. Okay, so let's see. So this is new to me. I haven't looked at this yet. So conservative, base, optimistic. Ooh, we have 9 concurrent viewers. Welcome everybody. Thanks for joining in. At any point you guys are interested in me asking this, while doing this research, if you want me to ask a certain prompt, please offer the suggestion in the chat. This is all learning process. This is new to me as well. So I'm just trying to figure out how I can incorporate ChatGPT into my research process, and what is the limitations? What is the limit at which, how far can I take AI in helping me? That's what I want to figure out. Okay, so shipping share. So I think earlier it's basically was saying shipping share as a percentage of depreciation, I believe is what it means. Exit multiple, IRR. Okay. Awesome. I built a sample but transparent shipping IR model from Excel and showed the full cash flow as tables plus charts. Okay. CapEx outflow depreciation free cash flow pulled straight from the workbook down with CSV. Two IR frameworks. For the shipping business with three scenarios, conservative, base, optimistic, you'll see results and exact cash flows in the table displayed above. And here are the examples. Cash flows per scenario, conservative, base, is two methods. Interesting. How the IR is constructed so you can sanity check. Shipping allocation, allocated consolidated CFO, CapEx, depreciation through shipping using a share of 85, 95, 90, 95 scenarios. The base 90% is anchored to fiscal year 2025, where shipping is 92.5% of sales for the business report. Segment mix. So proxy is reasonable but conservative. Method A, whole period IRR. Treat 2015 shipping CapEx as additional investment. T equals 0. Cash flows equals fiscal year 2015 shipping CFO to avoid double counting that year's CapEx. I mean, that wouldn't be accurate because we don't know if that was when, like, that wouldn't be accurate because we don't know, like, if that was a maintenance year or that was like a renewal year, or like how much of the fleet was actually changed, right? Like, you can't. I think you have to start off with essentially how much is a brand new vessel just from scratch. Like, this gives a portfolio equity style IRR for the whole decade's cash generation relative to starting outlay. T equals 0 equals 2020 shipping CapEx, big renewal year. T1 to 4, okay, fiscal year 2021-24 incremental shipping fee cash flow and pre-investment baseline. Cash flow 6 to 8 times. This approximates IRR on CapEx post. I think it's misinterpreting what I want from IRR. I basically want, okay, what is the CapEx on a ship, right? And then how much do those ships actually produce in income? And just from purely the cash flows, not an exit multiple, because at the end of the useful life of the vessel, it's going to be worth like almost nothing, right? So this incremental cash flow multiple, and there's no exit scenario here, right? So that doesn't make sense. Okay, because the closures don't provide shipping segment cash flows by product vessel, these are best effort proxies, not an official segment IRR. Okay, so I already know it's gonna spit out. It's probably kind of bullshit, but I'll just take a look. What does that mean? It expired. Ask about Ethereum, Bitcoin. No, I'm not doing that, bro. I don't. Really? None of this. Huh. Terminal cap rate. Okay, so that's not what I want to look at. Okay, so. So I'll just probably say this. This is not, okay, that's not what I want from IR standpoint. I want to know. Actually, I should ask it based on the attached documents. What do we know about the... Oh, nice. We have a new subscriber. Thank you for subscribing. That's usually the sound that happens when a new subscriber joins in. So thank you. Who was that? Nasty Devil. Thank you, Nasty Devil. Sorry, I will not be talking about cryptocurrencies. That is not my niche. If you want someone to talk about cryptocurrencies, it's probably somebody else. Yeah, so based on the attached documents, what do we know about the fleet of the company, the useful life of it, based on your knowledge of the industry? How much is a brand new Here's the thing. I don't know whether there's different sizes of ships. Okay, how much is each of their ships? If there is such information. Um, what else do I know? What do we know about the fleet of the company, the useful life based on your knowledge of the industry? How much is each of their ships, if there's any? If there are different category of ships, also provide details about those as well and their price. I need to add the part where I talk about like the Japanese part. So I asked the following problem in Japanese. Assume your investment. Yeah, you're an analyst. So I have to add that part into this. Maybe I don't have to do it again. I think it sometimes is smart enough to remember what you asked before. So I'm just going to be a little bit abundantly conservative here in crafting this prompt, I guess. Okay, so after this, because if we know how much they pay per vessel, then that would be helpful, right? So we should establish that because that would be the if there's an IR calculation, right? That would be the T equals 0, negative capex, and then yeah, because it shouldn't use just capex from 2015 as the initial capex. So it doesn't really make sense unless they sign a lease or they have a finance lease or something like that on the boats, which is very likely. Right? If the 20 years is useful life, and it probably has some type of, it might not dish out all that cash all at once. Yeah. So RORO vessels. So we don't know what that is. While this is generating, I can open up another tab. We can even use Grok. While this is generating, let's use Grok to ask it, what are RORO vessels? I am looking at 9171 Kuribayashi steamship. I should probably also ask the following okay. That is a long ass response for a very simple question, but okay. Okay, so what are RORO vessels? Roll on and roll off vessels are specialized ships designed to carry wheeled cargo, such as cars, trucks, and construction machinery. Oh, I see, and other goods, which can be loaded and unloaded by driving or using dedicated transport equipment. Okay, also known as vehicle carriers, RORO vessels allow for quick and efficient loading and unloading without the need for cranes. Reducing the risk of cargo damage. This method was developed by Japanese automakers for exporting vehicles to the US and Europe. Oh, interesting. It is now used for various types of cargo transport. Kuribashi Steamship operates maritime transport services, both domestically and internationally, handling cargo such as paper products, waste paper, cast and forged steel products, starch vehicles, and general consumer goods. The company provides integrated sea-land transport services, port operations, and tramp services for bulk cargo and RORO vessels. Are likely part of is vehicle transport operations. RORO vehicles are particularly efficient and cost-effective for vehicle transportation, commonly used in routes such as those from Hokkaido to Tokyo to Osaka or Osaka. While specific details about Kurabashi steamships' RORO vessel operations are not fully disclosed, their use is probable, given the company's focus on vehicle and general cargo transport. For precise information on the scale and contribution of RORO to operations, I recommend reviewing the company's latest financials. They benefit from rising domestic logistic needs and export growth. Okay. RORO vessel operations involve fuel and maintenance costs, making them sensitive to oil prices fluctuations. Okay. When evaluating Korabashi for investment, consider specific. I didn't even ask it for this stuff. Okay, interesting. What do RORO vessels even look like? That way I can have some visual image. Oh, okay, there's an actual video, so we can watch that together. Oh. We have that. Sorry about that, guys.
How do thousands of cars and trucks travel across the oceans every day? Ro-ro ships, or roll-on, roll-off ships, are specially designed vessels built to transport wheeled cargo like cars, trucks, and heavy machinery. Depending on the size, these ships have multiple decks, accommodating anywhere from
Can you guys hear this, by the way?
to thousands of vehicles. Today, we're looking at an example of a large ro-ro ship, 199 meters long,
way too slow,
capable of carrying over 6,000 to 9,000 cars. This model is PCTC, Pure Car and Truck Carriers, which means it carries a variety of vehicles, such as cars, trucks, and construction machinery. In the contrary, DCC, Pure Car Carriers, they only transport cars. Let's explore the design of this ship. Ro-ro ships are often box-shaped, maximizing internal cargo space, while protecting vehicles from seawater, wind, and salt, which can cause corrosion or damage. The ship is equipped with 2 loading ramps, one at the side and another at the stern, mostly use the stern ramp. These ramps are operated using winches and cables. During the voyage, these ramps are closed. There are 2 gangways, one on each side of the ship, providing safe access for the crew, passengers, and visitors to board or disembark. Mooring stations, one at the bow and one at the stern. Ventilation hoods, there are a lot of them. We will explore the ventilation system later. Lifeboats, designated spots for tugs to assist the vessel. From the bridge, this area is visible, while the area below remains a blind spot. The wheelhouse is the primary location where the crew navigates the ship. The accommodation area is where the crew lives and works during the voyage. Located on the top deck, this area includes offices, a meeting room, and bedrooms for senior officers. The captain's cabin is typically positioned directly behind the wheelhouse, allowing quick and easy access in case of emergencies. This area outside marked winch only is for a helicopter to haul something or perform rescue operations by winching. It's not a landing spot. Below the top decks are additional crew bedrooms, along with essential amenities such as infirmary, gym, food storage, library, galley, dining area, and living spaces, but main power failure. Moving down to the internal structure of the ship, this ship model features 11 cargo decks, with some ships utilizing additional space on the top decks to carry even more cargo. There are fixed ramps and movable ramps. If you view the inside without the decks, it will be a giant space. The engine room, main engine, diesel generators, steering gear, fresh water tanks, and many other service tanks, engine control room, room for compressors and water treatment system, water ballast tanks, fuel oil tanks. But it requires reducing some available cargo space. Since every vehicle loaded onto the ship emits exhaust fumes, each deck is equipped with dedicated ventilation ducts to maintain airflow. Each duct is fitted with an axial fan. For example, these ducts supply fresh air to decks 3 and 4. And these ducts remove the contaminated air. Stern and side ramps are operated using winches powered by hydraulic motors. Inside the decks, there are both fixed ramps and movable ramps. Decks 4, 6, and 8 are liftable decks. These decks are divided into multiple panels, which can be lifted using mobile lifter vehicles equipped on board. By raising the deck to mid-level, the ship can store both cars on the upper section and larger vehicles below. Raising the deck fully to the upper level provides the entire space below for the larger cargo. With its flexible design and massive enclosed decks, a ro-ro ship could theoretically carry just about anything, even something big and secretive in disguise. But hey, I'm not here to keep secrets, just don't tell anybody. Let's take a closer look at how the loading procedure works. The stern ramp is typically used more frequently than the side ramp because it is bigger and designed to handle heavier loads. Larger vehicles are usually loaded first because they require more space. Smaller vehicles are loaded last. Each car is secured using lashings that are hooked into specially designed holes on the deck floor to keep them stable during the voyage. Cars are packed tightly together to maximize the ship's cargo capacity. After all, it is all about the profit.
Interesting.
When loading cargo, proper weight distribution is crucial and must be carefully calculated. Heavy cargo, like trucks or machinery, is typically stored on the middle and lower decks, while lighter cargo, such as cars, is placed on the upper decks. Distributing weight evenly throughout the ship is essential to avoid 2 key issues: trim and list. Trim, which refers to the ship tilting forward or backward in the water. Trim by the bow, trim by the stern. List, which is the ship leaning to one side. Listening to port, listening to starboard. To address these issues, water ballast tanks can be used to adjust the ship's balance. However, relying too much on ballast can increase stress on ship structure over time. The best practice is to carefully calculate weight distribution before setting sail. Imagine you are a super rich person.
Wow.
You have your own Roro. You live in a penthouse on the top, and the garage below holds 6,000 cars. Pretty sweet, right? Just some wistful thinking. Thanks for watching. If you see that I missed anything, please add it to the comment below. My name is Lucius. I'll see you next video.
Okay, that's interesting. Interesting.
Car carriers. They only transport cars. Just explore the design of this ship. Ro-Ro ships are often box-shaped, maximizing internal cargo space while protecting vehicles from seawater, wind, and salt.
So the beginning.
How do thousands of cars and trucks travel across the oceans every day? Ro-Ro ships, or roll-on, roll-off ships, are specially designed vessels built to transport wheeled cargo like cars, trucks, and heavy machinery. Depending on the size, these ships have multiple decks, accommodating anywhere from a few hundred to thousands of vehicles. Today, we're looking at an example of a large Ro-Ro ship, 199 meters.
Okay, I think that's enough information. But that was very informative, actually. The fact that you can adjust deck means that you can adjust. So if there's more demand for consumer vehicles, right, then they can basically adjust the the levels to adjust for different industries, right? So if there's more demand for heavy equipment for trucking, then they can adjust the levels, right? If there's more demand for consumer vehicles, then they can lower like this floor here, right? I don't know if you can see my mouse, but you can lower this floor here to have more consumer vehicles, right? So it's great that they can adjust the levels and to house different types of vehicles. So that's interesting, and yeah. Okay, let's go back to the output. Okay, so it generated something. This is all in. Oh, this is all in Japanese. Okay. So we're going to translate that to English and see what it spits out. It didn't take that long. Okay, let's see if there's, while we're waiting, let's think about what other questions we have. So, what is the size of the fleet? How's the size been historically? What's the price of the vessels? How's the price of vessels going up? So the RO vessels are only one type of vessel. I'm pretty sure they don't just do RO vessels. Yeah. What is the price of their various vessels? What's the useful life? Is it 20 years? What's the maintenance capex? Finish. Okay, so earlier we're looking at summarize the company's fleet, ship types, number of vessels, and key specs, and approach to useful life. Drawing on industry knowledge, indicate approximate new build purchase prices for each ship type, and for specific vehicles available. If there are multiple ship categories, provide details on price ranges by category as well. So fleet overview, based on latest disclosure, they have a total of 12 vessels. Okay, that's their information. So we have to verify that. Verify, but currently we have 12. Verify if there are 12 vessels. Okay. RR vessels, there's 6 of them. General cargo vessels are 6. Okay, it's a 50-50 split. What is G per T? What is this? Okay. Let me ask Grok a dumb question. What is G over T in this case? Gross tonnage. Okay. So I'm just going to prep this, translate to English. Are you done? Are you done? Are you done? Are you done? Oh, okay, perfect. In this context, G&T refers to gross tonnage, a standard international measure of ship's internal volume, indicating its size or capacity. Gross tonnage is calculated based on the total enclosed space of a vessel, cargo holds, crew areas, engine rooms, expressed in tons, where 1 gross ton approximates 2.83 cubic meters. I have no concept of what that even looks like. It is a key metric used to assess ship's economic value and geographical capacity. Okay, so there might be something called like dollar per G over T, maybe? Something like that. Kurabashi steamships, RO, and general cargo vessels based on provided data of Kurabashi ship. They have 6 vessels. How the hell? Did I say that? Oh yeah, I did say that. Okay, the average gross tonnage per vehicle is approximately 14,168 G over T, indicating relatively large vessels designed for efficient transport vehicles or large cargo with roll-on, roll-off capabilities. General cargo vessels, 6 vessels. The gross tonnage per vehicle is 498. Wow, that's a much smaller. Suggesting much smaller vessels compared to our fleet. These are used for transporting various cargo types, e.g., bulk goods. Maybe that's for their produce. Investment perspective. For RO vessels such as the Gurbashi steamships, primary transport capacity lies in vehicle and large cargo shipping, likely giving it a competitive edge in this segment. In contrast, the two for general cargo vessels indicate smaller scale operations, possibly focused on regional or niche markets. As an investor, it's worth investigating what the RO fleet drives the majority of revenue, or if the general cargo probably is RO then, if it's that huge of a discrepancy in gross tonnage. Reviewing financial. Okay, that's good information. That's good information. I'm gonna quickly take a look at notifications. Nice. Okay. Next. So main RO ships examples and specs. Shinju Maru. Okay, 14,000. Okay, they do list the tons. Delivered 2019, delivered 2021, delivered August 2020, delivered 2020. Okay, so in 2020 they spent a lot. They spent a lot on capex. So maybe these are new. Not sure. But yeah, 154 trailers, 250 finished vehicles, plus 2,000 paper towels. What does that mean? What does that mean? 2,000 paper towels. What? 2,000 paper towels? Is that? Okay, interesting. Shinne Maru. Maru. I wonder if Maru is like a Japanese brand for this type of stuff. Okay. They're all similar sizes. So Shinka Maru 14,054 GT. Shinsen Maru was introduced as a chartered vessel in 2020. There's a record of a Shinmei Maru in the fleet history, built in 2000. General cargo vessels being the 499 GT class. Shinman Maru 498 built in 2020. Ferries. Seiken Ferry. Hayabusa number 2, 3000 GT. And Hayabusa 3, another 3000 GT. Useful life assumptions. Statutory tax useful life in Japan reference. Steel ships over 2,000 tons or 15 years. Under 2,000 tons, 14 years. Okay. Car ferries, 11 years. Shorter due to passenger accommodation fit out. Passenger accommodation fit out. I'm trying to think what they mean by this. Okay, so in Vancouver, for example, you can take a ferry to Victoria, right? And then you load your car, and then you go up to the upper decks, and you sit in the upper decks. But why do those have shorter useful lives? I don't understand. That's interesting. Okay, accounting and practical practice. Many operators use around 20 years when economic reality supports it. Actual service lives tend to fall in the 15 to 20-year range, depending on trade and maintenance. For the Seiken ferry assets, a filing state that the company uses economic remaining useful life in impairment testing in future cash flow estimates. Life is assessed by asset group rather than rigid tax table. Ah, okay. So on tax basis, maximum is 15, but they will assess the economic life to extend it out further, which this would imply that this would imply that on their on their filings that the depreciation is higher than the actual economic reality then, right? Because you're saying based off of statutory and tax reasons, we have a max of 15 years, but we can use it to 20 years, and we economically assess it. You know, what I'm trying to figure out. Okay, so is depreciation overstated then, based off of what it's saying here, or if it does defining state economic remaining useful life impairment testing, blah blah blah. Then does that allow it to to kind of circumvent this restriction and allow it to actually depreciate at a rate that is in line with economic reality? I'm not actually not sure. I have to ask that question. So we need to put that there. How are they depreciating the vessels? Based on tax regulations or economic useful life? Can look into that. That's probably a question I can just even ask GBT to search for. For the Seiken Ferry assets, filings state that the company is okay. For Kuribashi's 14 GTRR is 15 years as the baseline under tax rules, while 15 to 20 years is a reasonable operating range, depending on upkeep and route profile. So I guess if you have calm waters, it lasts longer. For 3000 GT series ferries, 11 years is the tax baseline. Okay, reference prices by ship type. Specific reference, a replacement RORO in the company's context was reported at 4.5 billion circa 2013. The company subsequently operated Shinka Maru, which after modification is 16.7K GT. Industry sample since 2011. Average build cost is around 4.23, median is 4, across 8 RORO vessels in Japan. 8 RORO vessels. Okay, so another question is then, how many RORO vessels are in Japan, right? Because recently I've been looking at these stock pitches about, for example, VAL, people who are investing in offshore oil rigs, right? For example, right? One thing that they'll do is basically reference, okay, what is the cost of a new one of these oil rigs, right? How many are even in the market, right? And then if there becomes demand for these, then then the timeline from order to delivery takes a certain amount of time, correct, right? And then they are able to basically charge more once the market rebounds, that kind of stuff. So we need to know the industry dynamics, right? If there's only 8 RORO vessels and they have 6 of them, think about that from a perspective. The 2019 to 2020 14 KGT series falls in the 4 to 5 billion band per ship, subject to market and specifications. That's interesting. General cargo. So and they last let's say 15 to 20 years, right? So let's say 17 and a half years. Let's say. Let's take a look at that real quick. So I'm just gonna do something like this. So let's say their cost for 4,500 million yen. So RORO price in million yen. Alright, useful life. Let's say 17.5. Okay, so depreciation in this scenario would be 256. They have 6 of these vessels, right? So that would be times 6, so 1.5. Interesting. Right, because it said range, right? So range, we could write this down, 4 to 5 billion, right? And then this is 15 to 20 years, right? So we can pick what our assumptions are, right? Depreciation 1.5, and it depends what they pick as the actual depreciation, right? Because economic reality might be like 17.5, but they pick because it's over two tons. Yeah, they do something like this, right? So on accounting practice, it may be this. They have 6 RLR ships, and then we have to look at what is their general cargo, right? General cargo, right? And then figure out they have 6. They also have like RLR units, fleet, and then units. Sure, 6 annual total, something like that. 1.8. Okay, so this would be, but that doesn't include I guess the cost of maintenance, like hiring someone for an oil change, that kind of stuff, is probably inside the income statement, not in the Unless they change parts. If they change parts, that's normal capex, right? Sorry, this is really new to me, so I'm just thinking through this idea of what would be maintenance capex, right? Because this is purely depreciation of the value of the vessel, right? But we also have to factor in things that are like okay, like general repairs and maintenance. So maintenance, right? General cargo. We should also do something like this. So change RO and cargo. Alright, so this is definitely not going to be the price of that, but recent build-out cost of around half a billion, 500 million per vessel, reporting industry sources can vary with engine and efficiency packages. Okay, ferries, 3000 GT. No official per vessel price is closed as a rule, ferries are more expensive than RORO due to passenger facilities. Industry data for medium and long distance ferries show an average of 8.75 for larger. Wow, okay. So the creature comforts are quite expensive, I guess, for larger ships. The Seikan 3000 GT class would typically be below that, several billions of yen, range depending on spec. That's interesting. How many ferries do they have? Because I thought they had 6 general cargoes, right? So if they're half a billion each, so like 500. That's not a lot, right? Right. So total right now we are looking at around 2 billion of depreciation right now. Quick reference by category specs. So that's price band. RO domestic truck line, 14K. Key ships, Senju Maru. Yeah. Typical loading. 154 trailers, 250 finished vehicles plus paper roll. Price field. The fuck does that mean? 4 to 5 billion per unit. Okay. General cargo, 6 units. Ferries, they have 2 units, 300 passenger, mixed vehicle. They have 2 of these? Okay, let me just go back up because it said ferries. It said 12 vessels, right? So they have 6 of these and then 6 general cargoes. But how does what? Are they counting in the ferries then, or are they not counting in ferries? It's confusing. Let me ask. 2 ferries included in fleet calculation. Might be a hallucination here. You mentioned 12 vessels, 6 RORO, and 6 general cargo. Where does ferry fit in? Where do ferries fit in? I could also ask it where it's referencing this information from. Probably the securities report, if I were to guess. And then if it's true they have it costs that much, I have to sanity check that one. I'm actually not sure. So ferry. So we have 2. If we say 8750, 15 years. I don't know if that's 15 years. No, 11 years, right? 11 years, correct? Is what it said. 11 years, 800 depreciation, annual depreciation. What the fuck? So total consolidated depreciation. Interesting. Sanity check all these numbers. I think the ferries ones might be inaccurate, but we'll see. An average price. I mean, what is the where did they get this industry data from? Right, like it's several billions of yen per unit. No official figure disclosed. Notes on sources. Okay, Fleet counts, composition, entry into service are based on company's business report and annual security report. Okay, so we can look into that. Use specs for key ROR vessels or from company's official websites. Materials, useful life reference are based on Japan's tax life tables, and we probably double check this too. Price ranges are triangulated from industry publication and sample data sets. They are indicative and vary with yard. Main engine, environmental compliance, and optional equipment. If you'd like, I can extend this into vessel by vessel remaining life ladder using book values and cumulative duration and match to CapEx history to frame a fleet IRR range. That's very useful. But let me just look at his answer. No, the two ferries aren't included in the 12 vessel figure. Okay, operating vessels. This two. Okay, there's no ferry category in that count. A ferry sits with its shipping segment. This is Yaoha, Youke, general passenger ferry business, but they are operated by the consolidated subsidiary Seikan Ferry, 99.7% owned. That subsidiary is explicitly shown as handling the ferry business. The group added Hayabusa 2 in April 2023 and Hayabusa 3 in January 2024, confirming 2 ferries in service. But again, these belong to the Seikan Ferry subsidiary, not to the parent's 12 vessel cargo. But if they know 99.7%, it's going to be reflected in their balance sheet, right? And we'll just ask a very simple question. Are these subsidiaries, this is a probably dumb question, but are subsidiaries Seikan Ferry balance sheet integrated with 9171's? Yes. How are the subs income statement account earnings reflected on the income statement? I'm letting GPT do all the work right now. And then if we take a look at, let me just quickly take a look at what has the historical, what has the P name been historically? Okay. Okay, so they took 2 ferries in these 2 years, right? So if they did that, and then what's CapEx? I wonder if these are leases entered into and deleted. Okay, we can ask that question. You know, how does these vessels finance leases, cash paid up front? Probably unlikely, but you know, given low interest rates in Japan, it would make more sense probably to lease them. Yeah, because even if we add this up, this is 24 billion, right? And if they, let's say it is cash up front, right? For the two I want to say ferries, right? If it is true that they're 8.75, that's literally, you know, 17.5 billion for the pair, right? And that would leave 7 billion remainder, right? That would only give them enough money to buy 2 more RO vessels, but it seems like they had 4 delivered since 2019, right? So unlikely, I would say. So probably cheaper. They're probably cheaper. Yeah. So its assets and levies included in yes, and its revenues are fully consolidated in the income statement. That's good. The portion not owned by parent is shown as non-NCI. Okay, cool. Um, Statement consolidated results are consolidated and then split in the bottom into profitable profit attributable to owners of the company. Okay. Yeah. BS and P&L are fully consolidated. Okay. So no issues there. Yeah, I have a feeling they aren't 8.75 billion. I think that unlikely. Unlikely. Um, so okay. Provide me a detailed. Oh, okay. Let me ask that question of are these finance leases or cash upfront? So how does 9171 buy these vessels? Through cash in hand or leases? That's very important. Again, I'm trying to see, you know, how good GPT is. So purposely not searching for these myself so that, I get a sense of like, what the capabilities are. Of course, I have to if I actually do the real research, like this is okay for like, an overview, post, but for anything this deep dive, I wouldn't do this. Um, Okay, short answer, they mostly buy and own the companies and fund them with debt and stage payments, not leases. Leases exist, but they're a small slice of the capital structure. Lease liabilities are only about 188, plus non-current 512, while long-term borrowings are about 11 billion, and long-term payables are about blah blah blah. The balance sheet also carries lease assets, hence small compared to the ships of 17.5 billion. This suggests leases cover some equipment and vehicle and only a limited portion of fleet capex. The cash flow statement shows classic own and finance behavior, sizable cash flows for acquiring PPE, and inflows and outflows for long-term borrowings and changes in long-term payables, lease repayments, or present but modest. How to read this? Primary funding for vessels, cash generated from operations, bank loans, supplemented by long-term payables to shipyards. Leases are not the primary procurement route. Separately, the P&L includes charter hire, which indicates they also charter in capacity at times. That's an operating expense, not a balance sheet. Oh, okay. Okay. So if they have excess demand, they will charter. Okay. Vessels are mainly owned and financed through bank debt stage payments. Okay. Obviously, don't completely rely on this. You have to sanity check. But I also want. So now I want the provide me the timeline of vessel deliveries, vessel payment, and vessel delivery from, let's say, fiscal year 2015 until now. If I can figure that out. Because I didn't give enough, I didn't feed it enough documents, to be honest. But let's see if I can figure it out. Because I only uploaded the last fiscal years, which would only provide me 2 years of vessel data. But maybe in the security report they might have a larger timeline, right? So that would be helpful. Okay, just thinking. What is the timeline of vessel acquisition and delivery date? So, while I'm waiting for it to translate stuff, I guess this does help me get up to speed on certain things, right? Right, for example, like, oh, based off industry reports, of course, you have to definitely sanity check these numbers and think about whether they actually make sense. I don't know, I think if they spend actually 8.75 billion per ferry, that would be a tall task for them to even try to. I think the reality might be something like this instead. This makes a little more sense because then they have some room to, pay for general repairs, right? Like, I wonder what the actual annual repair costs are or something like this, but it's hard to say. But yeah, this would probably make more sense. We don't know how they outfitted the ferry. They don't know what the ferry is primarily used for. Is there a kitchen? Is there luxury rooms? Are there places for people to stay, or is it just a place for people to sit? We don't know how it's outfitted too, right? So, okay, so they had two deliveries in 2020, November 2019, March 2020. In fiscal year 2021, they also had another two, but they had a general. Oh, they had one general cargo one. Okay. Shinemaru. I can ask LLM that. But from the video we watched, right, it would be some mix of you know consumer vehicles and some mix of, let's say, if there's more construction going on, so people would need more forklifts, for example, right? Or if people doing, yeah, like or even Kubota, Kubota smaller, or like micro forklifts, like smaller forklifts, right? It could be that too. But we can ask it based off industry data what it thinks. Um, so there's been four RORO deliveries. Oh, but there was one chartered, Shinsen Maru, chartered in August 2020. So that's not delivery. General cargo and the two Hayabusa entered service. Entered service. What does that mean? Other years, no additional new builds entries for disclosed fiscal year 2015 to 2019. Okay. Payment, it says reports reviewed. So only, hmm. Okay, if it only reported, okay, so this might be inaccurate, right? Because if it only looked at my, the most recent fiscal year 2025 securities report, it probably doesn't go back that far, right? So this, we take the 2015 portion as a grain of salt. Payment timeline, CapEx, investing cash flow signals, acquisition of property, plant and equipment, 2014, blah, 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 2015, 1.4. Net cash used in investing, 3 and 1.5, 5-year trend. Indicates a large outflow in fiscal year 2021, another sizable year in 2024, and a lighter 2025 longer review. I pulled the 2015-2014 history. You can download it here. Shows a capex spike consistent with consistent with 2019 RORO rollout. How payments align with deliveries interpretation. Typical pattern shipbuilding contract progress payments, long-term payables, balance at delivery, finance mainly with bank borrowings and long-term payables. Leases are minor in the group. The back-to-back RO introductions in 2019-2021 plus a charter line up with heavier investing cash flows in fiscal year 2020 and 2021, the effective payment window. Let's take a look at that real quick. So 3.5. Okay, so fiscal year 2020, 2021. Yeah, so yeah, here we have like around 15 billion, 14.6, 14.7 billion. If you want, I can overlay delivery events onto the year by year capex and cash flow statement table and hand you a one-page outline showing payment magnitude and ship name and delivery month per fiscal year. Okay, so 15, they delivered 3. That makes sense. This was chartered though, so it's chartered. So to confirm, the RORO Shinsen Maru 14054 GT chartered in August 2020 is only chartered, correct, and not delivered, meaning they rented it. Okay, let's ask Jason's question. So I'd be curious if Owen thinks this company's ROR business is super dependent on the Japanese auto cycle. Okay, fair. You can ask that. I would think so, right? Because if we think about it, like Japan's main industry is, you know, automobiles, right? So, but Japan also has like a Kubota, you know, like these mini forklifts. So they also have forklifts. So yeah, but probably more consumer vehicles. The filing explicitly says, which means Simpson was chartered, okay, not delivered as an own new build. In other words, they rented the vessel rather than taking ownership. As a contrast, the ship history section marks own deliveries. Okay, so if they spent, that makes a lot of sense, right? Because okay, so if we look at that timeline, this timeline, right? So I said this is, you know, this is 4, that's 8, right? They spent 9 that year, right? And this is another one, you know, delivered, delivered. So this is 4, right? And this is 0.5, that's 4.5, right? And then you have a little bit of room for, you know, like let's say it's not 4 billion, it's like 4.5 billion or whatever. These are 2 different sizes, so this one might be slightly cheaper than this one, right? So it makes a lot of sense. Yeah. Yeah. Okay. Let's ask that question. Okay, so based on your industry knowledge, what industries drive are the main drivers, are the main customers for 9171's RORO vessels and general cargo vessels and ferries? If you can provide a percentage mix, please do so. Again, I maybe had to ask this in Japanese. Might have to, maybe have to do a, we might have to generate another version where I say that same line there. Give me one sec. So Jason said, that was cool how one of your questions earlier got to think multiple times before it started generating. Yeah, it goes through its thought process, which is very interesting. Okay, here's a clean investor useful view of who 9171 serves by vessel type plus the best percentage proxies that exist. Main customer industries, pulp and paper, long-standing core, OG paper, Nippon paper. Ships are set up for wallpaper handling, and the company repeatedly notes paper products are the principal cargo on its Hokkaido truck line. Steel and industrial machinery, the Japan Steelworks. Automotive, finished vehicles and parts, the newest ROs have dedicated car decks, capacity examples below. General merchandise, FMCG, and retail distribution via trailers, reefers for food. FMCG stands for, this is a dumb question, I think it's like food, something like that. Fast moving consumer goods. Okay, fair. Agriculture, food, building materials transported on trailers. Okay. Nice one does not disclose cargo by industry. The best national policy for ROR flows shows tonnage split by load type, not industry. Physical. Oh, okay. National proxy. So finished vehicles 58%, trailers 34.7%, containers 5.9%, heavy equipment and others 0.9%. That implies our demand is dominated by auto OEMs and trailerized freight. Okay. Trailerized freight, which includes paper, retail, steel, food. Okay. Company materials emphasize paper as a main cargo on its Hokkaido route, and its ships are specifically configured for roll paper, card deck, plus room for 2,000 paper rolls on new builds. I think these are really large paper rolls. These are not like you're not thinking about toilet paper here. We're thinking about like really large ones. Directionally, this suggests 9171's trailer share leans towards paper FMCG rather than autos compared with national. What? Main cargo. Um, hmm. Okay, I don't know if this is actually the correct induction of deduction of what this actually means. I don't think it actually might actually mean that. It could still be majority vehicles, and then like the second most is paper towels, paper rolls. Let's say. Main customers. Main customer industries, company specific steel products, heavy machinery, project cargo, building materials, wood, biomass. The company cites wood pellets on near sea routes. Okay. Agriculture and general goods depending on spot demand. Okay. Ferries, freight operators, trucks, trailers, freight heavy profile unaccompanied driverless units are 58% of vehicle sailings nationwide. Unaccompanied driverless units are 58% of vehicle sailings nationwide. 9171's new ferries, Hayabusa 2 and 3, are sized explicitly for trucks. Passenger and private cars, secondary to freight but strategically important. Okay. MLIT's ferry survey nationwide shows cargo by commodity roughly as light industrial goods 22%, metal and machinery 16%, special goods 16%, agriculture fishery 15%, basic industrial goods 10%, chemicals 9.5%, wood 3%, minerals 0.5%. This is useful for SACON freight composition. For freight, not for passenger. Quick capacity context facts helpful for sizing our new build example. Shin Ne Maru can carry 154 13 milli chassis. 250 cars and 2,000 roll paper. What's a 13 milli? Oh, is that like a truck? So like 154 13-meter long like trucks, maybe? Hmm. Okay. Group explicitly lists OG paper and Nippon paper, Japan Steelworks as key shippers. Main cargoes include paper products, recovered paper, forged steel products, finished vehicles, general merchandise. Company's latest briefing again flags paper as a dominant cargo driver. Okay, interesting. Bottom line, 9171 skews towards paper, FMCG, trailer freight with autos also meaningful, steel machinery present. National RO data indicate the market is 60% autos, 35% trailers by tonnage, but 971's own narrative points to a heavier paper and trailer tilt than that average. Sure, sure, that I agree with. General cargo mix of steel machinery, construction materials, biomass, and opportunistic spot cargo. Very primarily B2B trucking logistics across the strait. Commodity mix mirrors national ferry patterns above driverless units 58%. If you want, I can convert these proxies into working percentage mix. Papers versus autos versus other trailer rides with a transparent set of assumptions. Nah, that's okay. Now, I'm interested if I do this prompt versus the other prompt. What will happen here? That would be interesting. Because now it's to think in Japanese. I wonder if the quality of the response is higher now, or lower, or the same, or exact same. But I don't know if it realizes that I'm asking the exact same question and then decides to just copy the output from here. I don't know. Really not sure. That'd be interesting to figure out. But I think this is good information, knowing what industries are the main, who are the main industries demanding their shipping business. The company does not disclose revenues plus cargo mix by industry. Customer industry, the percentages below are estimated ranges built from hints in securities filings and a typical demand structure for Japan's domestic RORO and ferry markets. Main customer industries rationale. Um, Pulp and paper listed as a major client. Nippon Paper, Kurobashi's trunk ROROs are set up for roll paper handling. Paper has historically been a thick lane. Retail and food, general consumer goods, trailerized freight. This group runs integrated sea land trailer pickup delivery. Trailer cargo flows steadily. Automotive finished vehicles uses the car decks on ROROs. Steel machinery, heavy oversized items, a steady intercoastal staple. Pulp and paper, 35 to 45% elevated due to the named key shipper. These are estimates, but yeah, estimates. Trailerized general cargo, 25, 35. Automotive, 15 to 25. Really? I wonder how I got these estimates. Steel machinery and heavy cargo is 5 to 15%. Context. The network centers on Hokkaido Honshu Trunk RORO. The group provides end-to-end service, port handling to inland drayage. Base cargo is trailerized flows, paper, daily goods, and food, with autos and industrials layered on top. Interesting. Okay. General cargo vessels, small, mostly non-scheduled. Main customer industries, rationale, steel, machinery, construction materials, coastal industrial project cargo, wood, biomass, fuels. Near sea routes include wood pellets. Okay, that's the same response as before. Agriculture, fisheries, and regional general goods spot cargo as demand rises. Interesting how the mix actually changed from the Japanese one to the English one. They actually provide this information, uh, which is interesting. Ferries, main demand. Customer groups, B2B freight, trucks and trailers. Seikon is freight oriented. The midterm plan stresses more sailings and load efficiency. Passengers and private cars secondary, but strategically important. New builds aim to bolster this. Okay. Freight vehicles, passenger. So freight vehicles, 70-80%. Okay. Takeaways. Core is pulp and paper. Trailerized general cargo, and auto is also meaningful. Paper likely over-indexed versus peers because of named key shippers. I mean, that's hard to say. General cargo, industrial materials, steel, construction machinery, plus growing biomass. So one way to actually circumvent this is literally look at their customer concentration. So if they, anytime a customer makes more than 10% of revenue, they have to report it. So if it is a case that Nippon Paper is over 10%, then they have to disclose that information. So that would give us a hint, and But of course, if you have multiple paper mills, right, and they all, let's say, Nippon Paper is 8%, and some other paper company, Osaka Paper and Tokyo Paper, they all make up 8%, then it's not going to be reported. So that makes things hard a little bit, right? Whereas because then that would indicate like a 24% mix, but it's all hidden, right? So it might not be the case. Interesting. But this gave us a good idea of things. Let's ask this question real quick. No, in the latest securities report, Kobayashi states that there were no customer accounting for over 10% of sales, as disclosures omitted. Yeah, okay. They do list certain counterparties as major trading partners in the policy shareholder note: OG Holdings, Nippon Paper, Rinko Corp, but that's not a 10% sales disclosure. Okay, fair enough. Yeah, so I think it's been very helpful in getting me up to speed. Of course, this company doesn't provide all the details, but I guess this is helpful. It can search documents for things, so I guess that's helpful. So instead of finding it on your own or control Fing, I guess you could just ask it right away. I haven't looked at the validity of its claims in terms of searching up industry knowledge. Okay, so like based on industry reports, we know that this percentage of transport is taken up by automobiles. For example, it was like 50 something percent or 60 something percent, right? So that's helpful to gauge like what a feel for the market is. I think that helps. Um, I think this part wasn't very helpful. I don't like the fact that these things you can't actually download because the code interpreter session expires. Like, if you have an expiry, maybe notify me that after a certain amount of time that it expires so that I can download it right away, maybe. Or else I'll have to generate the exact same prompt. And there's a chance that if you ask it the same thing, maybe it gets two different answers. Whereas in this case, when I asked the English version, it had a different answer, and when I asked the Japanese version, it also had a different answer. Um, so, yeah, you gotta, yeah. sanity check these things for sure. Hmm. But yeah, that was helpful. That was helpful. I think this helps with expanding your circle of confidence. So like if a company is outside of your wheelhouse, like this company's clearly, I've never looked at any companies like this before. So I think it was definitely very helpful in having like generating a framing of what this company is like, for example, right? And then sanity checking, hey, you know, what we think depreciation will look like, right? Based off of, we know what the average RO vessel costs, right? What the average, general cargo costs, right? And then having some prediction of, generating some prediction of, what consolidated depreciation would be like, right? Right? We play around with numbers to feel around for that type of thing. So yeah, pretty helpful. I'm gonna take a break now. I'm just gonna keep writing my top five posts. Look forward to that, guys. I have five new stocks that I'm gonna be showcasing to you guys. And so yeah, stay tuned. If you haven't subscribed to my Substack, please go to my Substack. It's in the link below. Definitely go check that out. Check out my Twitter if you haven't followed me yet. And yeah, I might be maybe after my dinner break, I'll come back and maybe do another one of these if you guys are interested on a different company. But yeah, today I'm just like writing my latest stock pitch and well, live stream summary of the top five stocks that I found for last month. So yeah, that's the goal. Okay. Thanks for tuning in. Thanks to Jason. Thanks to Nasty Devil for subscribing. Thanks for everyone who has tuned in. I know some of you guys are secretly just not saying anything, but thanks for tuning in, everyone. And I will catch you guys later on. If you guys have thought about any like interesting prompts you guys want to ask, definitely DM me. If you guys have figured out a certain way to approach equity research, stock research, um, in using your own ChatGPT. Oh, by the way, I'm using ChatGPT 5, so I'm actually paying for this right now. I think it's like 20 something a month or 30 something a month, can't remember. But yeah, I am paying for this. For you to replicate what I did, you might have to pay for it too. I'm not really sure. I think the first couple of prompts after a certain level amount of work, it's free. But then if you don't, yeah. So this is the paid version, just FYI. But yeah, if you guys have discovered any useful prompts, shortcuts, I am always trying to improve my process. I want to learn from you guys as well. So if you guys figure anything out, please DM me. Please DM me useful prompts that you figured out that save you a lot of time. I'm always looking for ways to improve my process. So yeah, thanks a lot, and thanks, Jason. Yeah, Jason said good stuff. Have a good dinner. Thank you. I don't know where you live, but hopefully, if you haven't had dinner yet, hopefully you have a great dinner.